what is Parabolic SAR. And by the end of this session, you should be able to understand what is Parabolic SAR, how to add it, interpret and use the indicator. The Parabolic SAR is a technical indicator developed by J. Wells Wilder to determine the short-term direction of an instrument. The indicator is also referred to as a stop and reverse system, which is abbreviated as SAR. It aims to identify a potential reversal in the price movement of traded instrument. The Parabolic SAR is graphically plotted on a chart, and it is displayed as a series of dots. If it appears below the current price, the Parabolic SAR is interpreted as a bullish signal. When it appears above the current price, it is interpreted as a bearish signal. Let's look how to calculate the Parabolic SAR indicator. The Parabolic SAR uses the highest and lowest price as well as acceleration factor to determine where the SAR indicator dot will be displayed, either below or above it, and it helps to determine the current direction of the price. For uptrend Parabolic SAR, the SAR value for the previous period minus with the previous acceleration factor, and the acceleration factor is multiplied by the difference between the extreme point and the previous period's SAR. For downtrend Parabolic SAR, the SAR value for the previous period plus with previous acceleration factor, and the acceleration factor is multiplied by the difference between the previous period's SAR and the extreme point. We'll go through the Parabolic SAR indicator trading technique in details on a chart, and also how to use it with combination of price action. Let's begin with placing the Parabolic SAR on chart. To place the Parabolic SAR on chart, there's few methods to do it. The first method is go to Insert, then Indicators. Under the Trend, select the Parabolic SAR. The second method will be easiest once, as you click and drop it from the Navigator panel. To do that, simply go to the Navigator panel, Indicators. Under the Trend, click the Parabolic SAR, drag and drop it on chart. It's done. Now, let's look how to use the Parabolic SAR in trading. The Parabolic SAR is usually represented in the chart of an instrument as a set of dots that are placed near the price bars. Generally, when these dots are located above the price, it shows a downward trend and it gives a sell signal. When the dots move below the price, it shows that the trend of the instrument is upward and gives a buy signal. The change in the direction of the dots produces trade signals which can produce a profit when the price makes big swings. The indicator is not as reliable in a flat or sideways market. When the price of an instrument rises, the dot follows the price as well. The Parabolic SAR works well for capturing profit by entering the trade during a trending market. It also may produce a false signal when the price moves sideways, and the trader should expect small losses or small profits. There are four methods in which traders can use the Parabolic SAR during trading. They are: identify the stop and reverse in market direction, the entry signal, stop loss and trailing stop, and finally by using the Parabolic SAR in combination with a trend indicator. Let's look one by one in detail how to use them. Stop and reverse. When the dots are on the price's lower side and moving upwards, this usually means that the price is also will be moving upwards. And when the dots are on the price upper side and moving downwards, this means that the price is also most likely moving downwards. And what we see is that while the dots are on top side, they can be also on the bottom side. The transition from top to bottom. However, they never happens at the same time. So the idea here is prices switches, or as the dots switch from bottom to top, we will be expecting some types of reversal occurs in the market. If the dots moves from bottom to top, it indicates that we are likely losing bullish momentum and should expect some bearish momentum to follow as long as the dot remains on the top side. But when the dots move from top to bottom, it means that the sellers losing their strength and we prepared for buyers to take control of the market and start pushing the price higher. This is why the abbreviation SAR stands for Stop and Reverse. Let's see how to use it for the entry and exit signal. The Parabolic SAR is quite good at recognizing predetermined trends. It indicates which way the market is heading, but it does not show us the strength of the trend like other types of indicators. For example, now we have a buy signal here. The idea behind this signal is that when the dots switch from the top side, which is a bearish market condition, to the bottom side, which is a bullish market condition, the transition that occurs in this phase is that traders will look to execute a long position in the market. The reason for this is that with dots on the bottom side, after coming from a series of dots on the top side, we see a turn, and this turn will act as an entry signal. We see a shift in the market from sellers to buyers, and the traders will catch this opportunity as early as possible. And now let's look at the how to exit the buy order from the market. When exiting the market, we could simply back when the dots decide to flip from the bottom side back to the top side. And we can use this as an exit strategy for a take profit goal. Similarly, for sell order, the idea behind this signal is that when the dots switch from the bottom side, which is a bullish market condition, to the top side, which is a bearish market condition, the transition that occurs in this phase is that traders will look to execute a short position in the market. The reason for this is that with dots on the top side after coming from a series of dots from the bottom side, we see a turn, and this turn will act as an entry signal. We see a shift in the market from buyers to sellers, and traders will catch this opportunity as early as possible. And now let's look how to exit the sell order in the market. When exiting the market, we could be simply back when the dots decide to flip from top side back to the bottom side, and we can use this as an exit strategy for a take profit goal. The disadvantage of Parabolic SAR, which I should point out, is that it does not provide us with the predetermined take profit level. We will be waiting there for as long as we can and getting out when it flips. Due to this, traders is required to stay aware and focus when in a trade with this type of exit strategy. Stop loss and trailing stop. The Parabolic SAR indicator shows the ideal level to place the stop loss. This can be done by placing the stop loss on the first dot which appears after the shift to match the Parabolic SAR indicator when market changes its direction. For a long trade, the stop loss should be set on the first dot below the price, and for a short position, it should be placed on the first dot above the price. The Parabolic SAR can also be used as a trailing stop. Since we will be placing a stop loss on the first dot which appears after the shift, the stop loss can be gradually raised by following the dots for a long position or decrease for a short position, essentially locking in the profits by following the market trend. And finally, on the combination with the Parabolic SAR. J. Wales Wilder recommended using other indicators to confirm the market trend direction. The indicator which can be used together with SAR trading signal is moving average and the candlestick pattern. For example, when the instrument price falls below a long-term moving average and the Parabolic SAR is above the price, it confirms the sell signal. And if the price is above the moving average and the parabolic SAR switches from top to bottom, it confirms the buy signal.